Hey everyone, I recently studied the research report titled Fundamental New Year Picks 2025 by Axis Securities and found it very interesting. This report briefly reviews market performance in 2024 and share the outlook for 2025 that covers key factors that would drive the market performance in 2025. And then this report highlighted 6 golden themes for 2025 followed with 9 fundamental stock picks from these 6 themes and the reason behind the selection of these 9 stocks. I found this report quite interesting, so thought of sharing it with you all. But before we begin, I would strongly recommend doing a thorough research from your side before investing your money. Alright, let's get started. So 2024 was a year of mixed performance for Indian stock market. The first half was fantastic with good growth in large cap index and excellent growth in mid and small cap index. However, second half witnessed correction and volatility driven by slowdown in earning momentum, FI selling pressure due to various concerns, then focus on allocation towards China as compared to India within emerging market, then slowdown in various sectors like FMCG, auto, then weak deposit growth in banks, then fifth factor, general election outcome below expectation, and sixth factor is rise of US bond yield and dollar index. The question is, what is the outlook for 2025? So as per the report, market will closely monitor the global development around events like policies in US government during Trump presidency, then trade policy, further rate cut by US Fed in 2025 and direction of currency and oil prices. On the domestic front, the market will closely monitor developments towards the earning growth, upcoming budget and rate cut trajectory in the Indian market. As far as budget is concerned, the last few years of budget was focused towards capex. And that was a key trigger for economic growth. However, this resulted in lower allocation to socio-economic scheme and resulted in challenges in rural part of the country. And recently, Maharashtra election has witnessed schemes like Ladki Bahin Yojana that became a massive hit. And the expectation is that social schemes would play a key role in upcoming election in Indian politics. Considering all these factors, the first half of 2025 is expected to remain volatile, especially because the current valuation offer limited scope for further expansion. That's where corporate earning would be the most important factor. So going forward, in 2025, focus should be on bottom-up stock picking with growth at reasonable price strategy. And that's where Axis Securities team has identified 6 themes for 2025 that include structural play in premium consumption, growth story of Indian healthcare industry, companies with higher growth potential in the infrastructure value chain, pharma and telecom as defensive play, real estate led by demand visibility and reasonable valuation play in BFSI and right mix of rate cut cycle, defense, infra and consumption. Based on these 6 themes, they shortlisted 9 stocks with buy on dip strategy for 2025. Let's have a look at the list. So the first pick from Axis Securities for 2025 is Shriram Finance. It's a diversified retail focused NBFC with dominant position in used commercial vehicle financing. And used commercial vehicle financing market remains dominated by unorganized player that command nearly 50 to 55% market share. So there's a lot of scope for growth for organized player. Shriram Finance has an AUM of 2.43 lakh crore as of September 24 and operates through an extensive network of nearly 3,150 branches and 679 rural center. In addition to commercial vehicle financing, company has also expanded into gold loan, two-wheeler loan, MSME and personal loan. So that would reduce the cyclicity with lower dependence on commercial vehicle portfolio. Plus, Shriram Finance has steady asset quality with lower mix of unsecured loan. Over the period of FY24 to 27, Axis Securities expects Shriram Finance AUM to grow at 17% CAGR rate, then net interest income at 17% rate and earning to grow at 19% CAGR rate with ROA of around 3.3 to 3.4, ROE of 16 to 17%. Based on that, Axis Securities has given a target of 3,825 that implies more than 35% growth from current levels. But before you take a call on investment, make sure that you understand how to analyze the fundamentals of company, then important KPIs to look. So apart from revenue and profit growth, there are many KPIs that are specific to some sector. For instance, in case of Shriram Finance, net asset quality is very important KPI. That its valuation is gauged from price to book ratio as compared to price to earning. Then ROE and ROA are very important KPIs. In case you are new to this world of fundamental analysis, I would strongly recommend reading a book called Stock Investing Mastermind available on Zebra Learn platform. One of the best thing about this book is it is specific to the Indian market. So all examples you will get are from Indian companies, which is easy to relate as compared to foreign books. Plus, there are a lot of visual guides to explain difficult and complex topics in an easy way. Some of the very interesting topics from this book include how to read company's annual report, how to analyze financials of any company, how to do valuation analysis including PE ratio, price to book, EV to EBITDA along with DCF model, how to evaluate industry of any stock, then when to sell a stock, which is one of my favorite topic from the book. By the way, this book is not just about theory. Every concept is explained with real world example. I always say that the best investment you can make in life is by improving your knowledge, and this book will help you with that. So whether you are a beginner or have some experience, this book would help you sharpen your skill in the Indian stock market. For more details, I've provided the link in the pinned comment and description. Then second pick is from hospital segment. It's Fortis Healthcare. Company operates 28 healthcare facility, then covers over 4,500 operational beds and more than 400 diagnostic center, making it one of the largest healthcare organization in the country. Fortis is renowned for its expertise in complex medical procedure, particularly in your cardiac surgeries, radiation therapy and robotic surgery. Its occupancy rate has improved from 55% in FY21 to 65% in FY24 and expected to stabilize at 68%. And its ARPOB, that is average rate per occupied bed, has grown at 8.7% CAGR to 61,000 rupee, which is expected to reach at 70,000. Plus, the health insurance market is growing at around 18% annual rate and will add another 15,000 crore in premiums and would cover another 33 million people. Fortis plan to add 2,000 beds over 4 years, boosting its capacity by 45% to over 6,000 beds, primarily through your quicker break-even brownfield projects. The expected improvement in occupancy rate along with rising ARPOB and strategic brownfield expansion are set to significantly enhance its profitability. By FY27, Fortis revenue is expected to reach 10,600 levels and PAT to grow more than 2 times to levels of 1,400 with FY27 PE of 26. Based on that, Axis Securities has recommended a buy rating on Fortis with a target of 860 rupee per share, implying an upside potential of 20% from current market price. Then third stock is from real estate sector. It's Prestige State, a leading real estate developer based out of Bangalore. Company boasts a diversified portfolio that include residential projects like villas, apartments, township, commercial projects like corporate office, IT park, SEZ. Retail business includes shopping mall, multiplex, luxury retail and hospitality ventures like hotels, service apartment and resorts. The first rationale behind investment in Prestige State in 25 is key launches in H2 of FY25. Management has guided for pre-sales of 24,000 crore in FY25. Out of this, company has achieved the numbers of 8,000 crore in H1 of FY25. But management is confident of reaching its guidance and launching major projects in the remaining quarter. So that would be around 16,000 crore worth of pre-sale expected in H2 of FY25. Company has completed its QIP of rupees 5,000 crore. These funds would be utilized for debt repayment, business development and construction for rental asset. The expected free cash flow from ongoing projects is at around 13,800 crore, while those from upcoming projects would be at around 32,000 crore, and that would result in a total free cash flow of 45,000 crore over the years. And company's total debt would be around 10,000 crore at the moment, and net debt is around 3,600 crore. That indicates a net debt to equity of around 0.21, which is within their guidance. This level of debt will comfortably fund the future capex of around 13,000 crore for their annuity built-up projects. Company sales are expected to grow from 7,800 crore in FY24 to 19,500 crore by FY27, and PAT is expected to grow from 1,370 crore to 2,650 crore. Considering these factors, they have given a buy call on the stock with a target price of 2,195 rupee, implying more than 40% upside from current market price. Then fourth stock is from banking sector. It's City Union Bank. Incorporated in 1904, City Union Bank is a mid-sized private sector bank headquartered in Tamil Nadu. Bank operates its business through 812 branches with a strong presence in South India, having around 700 branches. Then Tamil Nadu account for around 65% of the branch network. The bank's main focus is lending to MSME, then retail wholesale trade with granular asset profile, including providing short-term and long-term loans to agriculture sector. Around 99% of the loan book is secured. Overall, the expectation is that City Union Bank would continue to grow at a healthy rate due to good credit growth in its core segment. Also, bank does not face challenge with deposit growth, so LDR would remain stable. And bank's asset quality is improving. So they have given a buy call on the stock with a target price of 215 per share, that implies around 25% plus upside from current market price. Fifth stock is from cement sector. It's Ambuja Cement, now part of Adani Group. First rationale behind investment in Ambuja is your capacity expansion to drive volume and revenue growth. Ambuja Cement capacity is expected to increase from current levels of 97 million ton per annum to 118 million ton per annum over FY25 to 26 and reach a combined capacity of 140 million ton per annum by FY28. As a result, over FY24 to 26, company is expected to grow its volume by 10% CAGR rate and revenue by 8% rate. On top of this, company's margins are expected to improve from current levels of 18% to 19-20% due to various cost optimization measures taken by the company. Also, there is consolidation happening in the cement industry, which is positive for Ambuja Cement. As far as demand is concerned, it is expected to remain strong, driven by increased capital spending by central government on infra projects as well as robust real estate demand. So Axis team has given a buy call on the company at a target price of 675 that implies more than 25% upside from current levels. Then sixth stock in the list is Domes. It is one of India's largest stationery and art product company that design and manufacture a wide range of quality stationery and art product categorized into your scholastic stationery, scholastic art material, paper stationery, kits and combos, office supply, hobby and craft and fine art products. It has now forayed into baby hygiene product as well. There is a structural growth trend in the stationery and art material and sector is expected to grow at 13% CAGR rate over FY23 to 28. DOMS is consistently increasing its product portfolio and expanding its distribution network. From currently at 1.22 lakh outlet and expected to reach 3 to 3.5 lakh outlets. Also, there is scope for margin expansion driven by operating leverage through increasing capacity utilization, improving product mix, then stable raw material price and improving on-ground execution. Company's revenue is expected to double by FY27 and net profit to grow more than 2 times. Based on that, Axis team value the company at around 60 times the December 26 earning to arrive at a target price of 3,120 per share, implying an upside of around 15% from current levels. Then seventh stock is from luxury retail sector. It's Ethos Limited. Established in 2003, Ethos is India's largest luxury and premium watch retailer with 20% market share in luxury segment, 13% in premium watch segment. First key factor to consider Ethos is structural growth trend in luxury space. As per estimate, the luxury market in India will expand 5 times in the next decade as number of affluent consumer continues to grow with higher aspiration and disposable income. Premiumization is a massive trend in the country where sales of luxury products have been high in many segments like your luxury car, luxury real estate, premium clothing and so on. Moreover, the demand for luxury product is not restricted to metros but has extended to tier 2 and 3 cities. So there's an amazing opportunity for retailers of premium and luxury products like Ethos. It operates currently around 72 stores and has guided for opening nearly 22 to 23 stores in FY25. Out of this, they've added 12 stores in H1 and in next 5 years, company plans to reach 150 stores. It is planning to open its first jewelry store in January 25 and also discussing to onboard several luxury brands to India in next few years. Based on these factors, Axis Securities anticipate company to report robust revenue growth at a CAGR rate of 33% and PAT growth of 38% over FY24 to 27. Based on that, they value company at around 45 times December 26 earning to arrive at a target price of around 3,750 per share. That implies around 35% upside from current levels. 8th stock in the list is from telecom sector. It's Bharti Airtel. First reason for selecting Airtel is its rising ARPU, that is average revenue per user. Airtel leads the mobile service industry in ARPU, which is currently at around 233 rupee, higher than Jio ARPU of 195. Airtel aim to increase this ARPU to around 300 rupee in the future by growing its consumption of data and 5G service. Since it's almost a duopoly market with Jio and Airtel, they would continue to increase ARPU, that would continue to increase their profitability. Management sees significant revenue and profit growth potential in the company, fueled by expanding the rural distribution, network investment and increased 4G 5G coverage. Another important factor is moderation in capex. Going forward, Airtel do not expect significant capex in near term after the 5G rollout. So it has identified over 2,500 sites for network cost reduction initiative, which will help lower operating cost in the future. Axis Securities team expect Airtel EBITDA to grow from 71,000 crore in FY24 to 1.24 lakh crore by FY27 and net profit to expand sharply from 15,000 crore to 50,000 crore. Based on that, the value stock at levels of around 1800 based on its FY26 PE of 18, suggesting a potential upside of 15% from current levels. And the 9th stock is from pharma sector. It's Cipla, one of leading generic pharma company in India with presence in respiratory, antiretroviral, urology, cardiology, anti-infective, and nervous system segment. Cipla operates 47 manufacturing facility producing over 50 dosage form and over 1500 products utilizing advanced technology platform to cater to over 80 market. The key rationale behind investment in Cipla include growth in US business due to approval of 4 new generic drugs. Its Indian business is growing at a steady pace. Plus, company is sitting on cash of 8,400 crore. That gives the opportunity to take inorganic initiative for mid to long term growth. They have recommended a buy with a target price of 1,735. That implies around 17% upside from current levels. So in this video, we have discussed the research report from Axis Securities that shared an excellent outlook on 2025 along with key factors that would drive the market movement. Then we discussed 9 stocks with good upside potential that include Shriram Finance, Fortis Healthcare, Prestige State, City Union Bank, Ambuja Cement, DOMS, Ethos, Bharti Airtel and Cipla. Now tell me in the comments which stock from this list you find most promising for 2025. If you find this video useful, like it and share it. I'll see you next video. Till then, take care.